David Chow is back with us in the studio to talk more about finance, and you're looking ahead and looking at what's in store in the markets this week.
Yeah, so central banks will be taking the spotlight next week. In particular, well, first up, the Reserve Bank of Australia. So its board will meet on Tuesday, and money markets are overwhelmingly expecting the Reserve Bank to keep rates on hold again at 3.6%. But there are some economists, particularly those from Commonwealth Bank, who are expecting one final hike from the RBA. So a bit of division there. So what's it going to decide? Well, I'm going to get some help from Anthony Doyle here, the head of investment at Firetrail, to get his perspective. Morning, Anthony. If you're a betting man, which you kind of are because you work in investments, what do you think the Reserve Bank will do next Tuesday? Hike or hold?
Yeah, I'd have to agree with the futures market, David, and say that the RBA will actually hold interest rates on Tuesday. But this is an environment that is as difficult as it gets for the Reserve Bank of Australia. Inflation's still very, very high at 7%. The unemployment rate still very low at below 4%. Wages growth is expected to come through, and as a result, the outlook is still very, very murky. But I think that they will be conservative, keep interest rates on hold at where they are, and wait to see more data coming in.
So do you think the Reserve Bank will hike at any point for the rest of the year?
It's really interesting. As I said, a lot will depend on how the data develops from here, but the market is telling us that the RBA is done and expecting that interest rates will remain on hold for the remainder of the year. 6 out of 26 economists in the market expect an interest rate hike on Tuesday, but they're very much out on their own. So much will depend upon how the inflation develops going forward.
Well, if you're right, then people with mortgages will be very happy to hear that when you say they're done, the Reserve Bank. Now, looking at other central banks, later this next week, European Central Bank and the US Federal Reserve will also hand down interest rate decisions, and a lot of focus will be on the US decision. What do you think the US Fed will decide, and how might that impact markets?
Yeah, so the bond market, 88% probability that the US Federal Reserve hikes interest rates to 5.25% on Star Wars Day, May the 4th. So certainly, again, what we're seeing around the world is developed economies in particular are grappling with very high core inflation, which excludes food and energy costs. So whilst energy has declined to some extent, we're seeing that labour markets are tight around the world. Workers are demanding higher wages, and that's feeding through into stickier inflation than what central banks are comfortable with.
And the effect of central banks and their interest rate decisions will play a big bearing on how markets perform for the rest of the year. So, looking ahead, with your investment crystal ball mind, what do you think, or what kind of assets will do well in the months ahead, especially given inflation and interest rates they seem to have peaked?
Well, last month was really characterised by concerns around the financial system, given the collapse of SVB and then the acquisition of Credit Suisse by UBS in Switzerland. And many are suggesting that this has brought forward the timeline for potentially a global recession, given that bank managers are likely to restrain credit growth in many of these developed economies. So whilst recession fears are certainly growing, equity markets have actually performed really well this year, led by those big stocks, those big names that are familiar to Australian households like Alphabet, which is Google, Microsoft and Visa, for example. So the companies that we're looking for in our portfolio at the moment, they don't have too much debt. They have the ability to continue to grow their earnings in a more difficult environment. And importantly, they have very sustainable business models.
And Anthony, I'm curious about this. Do you think there's too much optimism in the market given all this recession talk, especially when you consider Wall Street's tech index and NASDAQ has jumped 17% in the past 4 months? And since the year began, Facebook shares up 93% compared to the ASX 200 in Australia up by a measly, 4 or 5% in that time?
Yeah, David. So I go around Australia and I talk to financial advisors and investors directly. And what I tell them is it's really difficult to forecast what's going to happen in the next 6 months or so. So when you are building a portfolio of companies, you want the best value companies that you can find, the best growth companies or textile companies that you can find, and have a really good balance. And the most important thing is to extend your time horizon. Don't be flighty, don't try and make a quick buck, but rather invest in these companies for the medium to long term.
Good rational advice. Anthony Doyle, thank you very much for your time.
Cheers.